ikväll. Och så det är intressanta bolag här som ska presentera ikväll. Keith Hill kommer presentera Africa Oil. Jag tror att det var lite upp och ner med Africa Oil, men nu har vi faktiskt ganska mycket pengar i bolaget och har hittat 1-2 miljoner fat av olja. Så jag tror vi har mycket saker som kan hända under nästa 6-9 månader. So Keith has said, it's going to be a lot of excitement after all over the next 6 to 9 months. And we have the company's cashed up, so we're in pretty good shape. Och sen har vi, så blir det säkert vad han säger, och sen har vi Ron Hochstein, det är rätt, som kommer upp med London Gold som är ett nytt projekt vi har köpt. Det är nog en av de bästa guldprojekten i världen som ligger i Ecuador, som vi köpte från ett bolag som heter Kinross för $200 miljoner ungefär, och de spenderar 1,5 miljard på det. Så vi tror att det är mycket potential där, och nu gör vi en studie på det och sen kommer vi se det i produktion. Och Ron här köper om det på Keith kommer att snacka om det. Och sen har vi sen Lucara som alla tror jag känner till. Lundin är ett ganska nytt bolag i Sverige, det är ett nytt bolag för oss också. Vi har bara hållit på med det i 6 månader. Och nu så sen kommer Lucara som ni känner, alla känner kanske lite bättre, med William Lamb. Och det var ett fenomenalt projekt, därför jag tror den här diamantgruvan vi har är nog den rikaste diamantgruvan per karat i världen. Vi får ungefär $600 per karat i omsättning vi säljer, och det kostar oss ungefär $100 att producera. Så vi tjänar mycket pengar på det. Jag ska säga, what's the average sell for a carat in the world, William? Say for a mine, $200? 100. Så vi är 6 gånger rika än en normal diamantgruva i världen. Så det blir intressant att höra hans historia igen, och vi hittar massa stora diamanter hela tiden. Så med det ska vi börja med Keith till här. Keith.
I get this mic. Så jag ska inte prata svenska. Jag ska prata engelska. Very good to see a big turnout. It's a little bigger than the last turnout. Makes me feel like maybe you aren't all coming to see me. Maybe you're coming to see Lucas and the gold people and the diamond people. I understand gold and diamonds are almost as sexy as oil, so good. Also good to see we've got our first canine participant. We've got a dog in the front row. It's good to see us going outside to other species. I don't know if they can buy stock or not, but I understand some of the people in the chat room said our company's going to the dogs. So hopefully that's not a sign of the dogs coming to look at our stock. But I see a lot of friendly faces out there. That's also good. I know these are tough times, and you've been to enough of these. I'm always very excited. Every time I come here, I'm excited and I'm optimistic. But I have to say that last time was probably the roughest one we had. When I came here in the middle of the cold winter, and oil price was down about $40, and the funds in our bank were starting to go down a little bit. I have to say, even myself, I had to wake up in the morning and get myself pumped up a little bit. But now I think we've turned a corner, and I think we're actually starting to see everything come back up. We're seeing oil price starting to move. We're starting to see more interest in the sector, and I think our time is coming. When Lucas says 6 to 9 months, I think that's not a random thing. 6 to 9 months from now, you're going to see there's a lot of things going on, and I think we're really getting to an inflection point in our company. I'm also excited that I'm not the only one that's excited about the story. We went out and raised $225 million in the first part of this year, and that to me was a big endorsement that there's other people out here that see the value in this company. It was painful for the amount of dilution we had to do it, but I think you'll see the program we've got. We needed the money to keep going, and we needed to give ourselves a little cushion. Our plan hasn't changed. We still plan to bring in a big industry partner to either farm down, carry us through our development, or to possibly sell the whole company. But this is not a seller's market right now. This is a buyer's market. So part of the reason we raised particularly that second tranche of money was to give ourselves a bit of breathing room so that we can see ourselves through the next year and wait for the economy and the oil price to improve, so that we are not in a fire sale position. We have strength behind us, and we'll wait for the right offer. And in the meantime, what we do is keep our heads down and keep creating value. So mostly what I want to show you today is talk a little bit about what we're doing, how we're moving the project forward, how we're going to be ready for when that time is right to when we can sell the company. So most of you, there may be a few new gold people in here that haven't seen the story, so I'll do a little bit of introduction. But you know, the company is really based on a big Rift Basin play we made in East Africa. And we made this play the last time oil prices went down to where they are today. So back in 2008, 2009, when oil was $35 a barrel, we were able to go out and just pick up all the acreage we wanted. So we had very little or no competition, and we were able to pick up 250,000 square kilometers, or about 75 million acres of ground. Again, with almost no competition. So that really set us up in the players. And then we went out and got some partners. We got companies like Tullow and Marathon and shall we say the former effort to come in and carry us through some of the exploration stuff and made the big discoveries. So far we've only hit one of these basins. I think the only thing I'm disappointed in the last, say, 18 months to 2 years is we haven't opened up another one of these basins. We've seen some hints, we've seen some oil shows, oil source rocks, but we haven't seen another basin as good as the Lokochar Basin. But we haven't given up, and we'll talk a little bit about what we're going to do about that. So again, this is, these assets just don't come around very often. I've been over 30 years in this business, and I've never really seen where you could get an acreage position this big. It's actually 1,000 kilometers from the top of our acreage to the bottom. One of our things we like to do with investors, we put them in a plane in Addis Ababa, and we fly for 5 hours, never leaving our acreage. And it's a pretty daunting. The size of this is very impressive. So we still have about 11 basins that we haven't drilled in here. We've drilled about 5 more. About half of them have good hints and good encouragement. About half of them don't. So not all of these basins are going to work, but I'm still convinced that there's 1 or 2 more of these Lokochar type basins hiding out in this portfolio. So we are going to be doing that in the future. But really right now we're focused on the Lokochar Basin. So, you know, we don't really have the funds, or shall we say the funds are too expensive to be able to do both wildcatting in all of these blocks and bring the Lokochar forward. We think, you know, the strategy now is really bring the Lokochar forward. We've got 600 million barrels of resources, but we think that this basin should contain well over 1 billion. And mostly what we're doing this year is to try to prove up as much of that additional resource as possible. Again, we are going in the development planning. We'll talk a bit about the pipeline. The pipeline is really the key to unlocking the value here. So I think we're making progress with the Ugandan and Kenyan government on a joint pipeline, and we'll talk a little bit about that as well. But the underlying thing that makes us all feel good, and I think why people are still investing in us, is this is very economic. You know, people talk about shale, and we'll talk a little bit about, you know, what it costs to produce shales, what it costs to produce deep water. You know, this is on the same order as some of the best stuff in the Middle East. You know, we will have less than $10 development costs. We'll have less than $10 operating costs. We can actually, once we're up and running, produce oil at $15 to $20 a barrel and have a positive cash flow. We probably need about $40 a barrel to actually develop these fields. And compared to our competitors and the shales and others, they can't come near us. Again, quite happy with the recent financing. We brought in a new core investor, Helios, who's a very Africa-focused fund. They were investors in Gary Guidry's company, Caracol, and they are very technically driven. I think they're going to not only give us strength now, but I think they'd be quite keen to back us in the future as well. But we haven't given up on the new basins. You know, that is where the biggest romance is left in the stock, and I'll talk about what we're going to be doing there in the short term. But really what we're focused on this year, and this is not a coincidence what's on this list. You know, we've been kind of passively and sometimes more actively talking with a lot of big oil companies over the last year, and what we get from them is this is what they want to see. If they're going to come in and either buy us out or do a farm-in deal, these are the boxes they need ticked off. And I think we're doing quite well on the first one. You know, people were concerned about the reservoir quality. So we've done these extended well tests. We've seen very good results off of those, and I'll show you some pictures from that. We've got the core analysis going now, and the core is showing reservoir that's much better than what we had in our previous models and in our previous resource estimation. So I think we're going to see some good movement on that, and I think by the end of the year we should be able to tick that box off. Growing resources, you know, eventually we are going to be paid for what our resources are. We're not going to get paid for exploration ground. We're going to get paid for barrels in the ground. I think the more, obviously then the more barrels we can get, the better. You know, we have been growing resources every year, and I'll show you a little bit about that, but I do believe with what we've got going now, I think there's a very good chance we should get near to 1 billion barrels of 2C contingent resource by the end of this year. But again, the key is to really move the development forward. I think, again, we're not going to get full value on this field until we can show people that there's an outlet for this crude. A lot of people look at Uganda. Uganda, they found oil 8 years ago now, and they're really no closer to developing it, and it's because they don't have a pipeline. So to me, this is number one on my list right now, is to get this pipeline sorted out, and I think that's what's really going to help add the value. So again, the Locatar Basin is very successful, big basin bounding fault. We have these string of pearl prospects that we drilled. We drilled 7 of them in a row successfully. This is where most of our volume, in fact, 70% of our volume is in these 2 fields right here, Gambia and Amasing. So this is the really good stuff. We do have some fields on the other side, which I think will be good contributors once we're up and running, but the developments can be focused on these 2 fields right now. So both of these fields have extended well tests going on them now. The results of this were well above our expectations. You know, normally we've been talking about having to pump these wells, and we might get 1,000 barrels a day if we're lucky out of these wells, but these flowed naturally at 6,000 barrels a day each, roughly. And I think this is not a reservoir issue. I think this is a completion issue. I think we're finally completing these wells properly. We're drilling in the oil-based mud. We're running the pumps. We're doing the completion without killing the wells. So I think what we're seeing is this is the real native ability of these reservoirs. We're just getting ready to do Gambia. Next week we'll start flowing the Gambia wells, and we're hoping to see the same type of results as that. And that will be a big factor for us. You know, 65% of our development cost is drilling. And if we can drill less wells to get the same flow rates, cut our capital costs down, it really has a very positive impact on the economics. So again, very good flow rates, and these naturally flowed. They didn't need pumps, so that's a good reflection of the reservoir. It's going to have knock-on effects on other things like recovery factor as well. Again, the appraisal wells, we've had 8 wells now drilled, all successful. Every one of those wells is going to add resources. None of those have been put into our current resource estimate, so we're especially the recent one in Acalas, we are going to be adding some significant resources there. And again, core analysis, this doesn't sound all that sexy, but we have a chance to maybe do a 20 to 25% increase in resources just by the data we get off of our core analysis. So this is taking the water saturations, the permeabilities, and applying those. 3D seismic has been really a key to unlocking all of this, and we're still working with that. I'll show you some examples of things we've got on the 3D and some of the deeper targets, these blobs out here that we were able to prove at the Acalas well. We will be starting to follow those up as well. Again, the extended well test, we actually drilled the original Amasing 1 well, then we drilled the second Amasing 1, and then we sidetracked it here. The idea was we wanted 2 wells that were on a development spacing 500 meters. So these are the 2 wells we tested at high rates. We're producing them into these 50,000 barrel tanks, and we actually have seen some pressure communication already just in short-term tests between that. So we're flowing these zones right now. Zone 4 is flowing out of this well, and it's been doing quite well, and I think we'll be seeing results of this over the next couple of months, but so far everything, no pressure drop, no significant water influx, everything seems to be doing quite well. We need to flow them for longer, we need to do some injectivity tests, but so far so good. Again, the core data, this 47, 34, 28, that's all water saturations. You know, there were companies that looked at us that said we had 70% water saturation in all of our reservoirs. Our average is about 35 now. And what that means is that's the oil in place. So basically the way you calculate volume, you figure out how big a container you've got, you figure out how big the holes are in that container that can hold fluids, and then you apportion how much is oil and how much is water. So if you cut down the amount of water that's in those reservoirs, you increase the amount of oil that's in those reservoirs. So if we increase the oil in place 25%, it's a direct multiplier for volume. We'll get a 25% increase in our overall reserves. So again, this is a very important thing because we can't measure water saturation with logs. These are very fresh water reservoirs, and they just don't. The electric logs don't give you accurate water saturation. The only way you can get it is from this core analysis. And so far, we're very positive on that. We're also seeing permeability is much higher than what we had expected. So So we kind of went into this with maybe 100 to 300 millidarcies as our permeability range. We're now seeing an average of about 300 to 500 millidarcies, but we're seeing some very big ones. You know, there's a 2.4 Darcy here. This is not quite as good as Johann Schwerbrück rock, but getting close. 1.2 Darcy's here. So this is really good stuff, and this will control some of those high flow rates. Again, Lucas keeps telling me stop showing so many seismic lines that nobody understands any of this, and it's just squiggles up there. But I think people have been here 7 or 8 times to see me. I think we're starting to become those seismic experts. And you can see this is the well the line we drilled on, and it looks like a bit of a mess. You know, there's possibly a fault here, there's possibly a fault here, and then there's just kind of spaghetti-looking stuff out in here, hard to join up. This is the same line on 3D, and even you non-geophysicists can see, you know, beautiful rolls at all levels. You can start really imaging these faults. This is really the tool that's going to give us the ability to develop these reservoirs. So now everything seems to be fitting together. The jigsaw puzzle is a little less complicated than it was. We also can predict where the reservoirs are. The other problem we've had in this basin, about the only dry holes we ever drilled, were ones that went into this basin facies, very tight alluvial fan facies. So again, at Twiga, we saw this and we did a sidetrack, and literally 150 meters away, we went from no reservoir to some of the best reservoir we've ever seen. Now we got a tool that we can actually predict that. The seismic gets this fuzzy character in here, and we can actually map on this seismic line where this basin thing is, where the basin fan is, but we can actually map it out in 3 dimensions as well. So this is a coherency clue from the 3D. Now we can actually see that there is a big alluvial fan coming off this ridge filter. The important thing is now we can avoid it. We don't have to drill our wells into that, and we can start booking reservoirs around it. So again, 3D, very, very powerful tool here. One of the biggest ways we're going to add resources is just drilling around where we made discoveries. So the Gamia field, which still is our biggest field, you know, we drilled the original discovery well here, and since then we've been stepping out on this. The biggest step out we did was Gamia 7. So we've added this whole lobe of the field that was never there before. So almost every one of these appraisal wells are going to give us additional resources. We also have drilled 2 more wells at Amasing, again, extending the field outlines, but also setting up this play to the south, which I think we've talked about before. Tight well here, nice porous well here, and a big ramp in between. Somewhere in between here, there's going to be a big stratigraphic trap that could be very big volumes. So that one we're probably going to wait and drill next year, but this is one that's definitely on the slate. The one I really like is this one in between. Amasing North was a fault block we've never seen on the 2D. On the 3D, now we can image that. You know, and sometimes geology is simple. You got a big oil field here, you got a big oil field here, you got a big structure in between. It doesn't get much easier than that. You just go drill in between. And I think this could be 100 to 150 million barrel reserve add. So this one's about as good as it gets. Very low risk, but very big upside. And if we look at the seismic line across that, again, for you budding seismologists, you know, we can start at this well here, the Gamia 1 well, which is one of the best wells in the field. And we can follow this 3D straight up dip to this location. So basically, this is the main reservoir, and you can follow it straight up dip to where we're drilling. So again, there's nothing in between there that would suggest that we wouldn't have an extension of that accumulation. The other area I really like is the Etom area. Remember, that was one of the last, the northernmost string of pearl well we drilled. We drilled it, we found a fantastic reservoir, we found oil shows throughout, but we only saw about 15 meters of pay. And frankly, we couldn't understand it. So now we've got the 3D, what we thought was one big simple anticline. Turns out there's a big graben right in the middle of it. And that's where we unfortunately drilled our well, right in the middle of this big graben. But what that sets up is a big high on the south side, a big high on the north side. Again, these are 100, 150 million barrel type prospects. So this is one of the ones that we're pushing to drill in the second half of this year. Again, a nice big new reserve add. And the reservoirs up here are better than the ones in the south. The guys from Tullow who work in Uganda say these look much more like Uganda reservoirs than they do Kenya reservoirs. And it may be because it's in the northern part of the basin where the sediments are being fed in on the fluvial sand. So again, this area to me is quite interesting, and I think there are a number of other prospects up north that if these prove, we can follow as well. So again, the key is to grow our resource base, and I think we've been doing that quite well. You know, from over the last 3 years, we've seen a market increase every year. I think we're going to see the same type of increase. I'd be disappointed if we have less than 50% reserve growth this year. Again, 8 new wells that we've drilled. We're increasing our recovery factor. We're decreasing our water saturation. I think you're going to see a significant move in this 616. The biggest move would be, of course, if we found Amasang and Etong. You know, each of those might add 100 million barrels to these numbers. So, again, my goal is to get to 1 billion barrels, hopefully by the end of this year. And I think right now, with the program we've got, I think we have a pretty good chance. The pipeline, it's very simple. There's 2 routes. There's a northern route and a southern route, and that's what's being debated now. The Kenyan government is very keen to build the northern route. It's part of a bigger LAPSET infrastructure project, which is road, rail, fiber optics, power, and it's really designed to open up the northern part of the country. So most of the population, most of the commerce, most of the wealth is located along the British Rail that was built at the turn of the last century. And they have roads, and the biggest cities are all around there. And I think it's a great social investment. And it's a part of a bigger project to hook up Ethiopia, South Sudan, Uganda, and even Rwanda. So I think there's a very good chance it will be the northern route. They're working with Uganda now to try to establish that route. There is a potential southern route as well. You know, frankly, either of the routes is doable. The oil companies are happy to do either one. What we're not happy to do is wait any longer. So, you know, what we want to do is have this settled. You know, the cost differential between the 2 routes is not significant. There's pros and cons to each one as far as where the terminal is, as far as the land access. But the bottom line is we can do either one of those. And they're not probably within 10% cost difference of each other. The important thing is to get this moving forward and get the commercial structure and the routing set up. But having said that, I think we are very close. The government has hired its own advisors. They've done their own independent study, which is being published in the first week of June. And they have basically promised that they will make a decision by the middle of the year. So that'll be one big thing to look for. I think once the pipeline solution is in place, you're going to see a lot more people interested in coming in and potentially partnering up with us. As I said, we haven't given up on exploration. Exploration is still the biggest growth vehicle we have. You know, as I said, we've drilled some basins. We have 1 firm well this year in the southernmost basin, the Kerio Valley. We're shooting seismic up here in the northernmost basin, the Apachama in Ethiopia. And then we are looking at possibly drilling some wells in the South Kerio Basin and even the North Lokichar Basin. So we haven't given up on this, and you know, the good news is we've got about 5 years left on this block. We've got 7 years left on this block. The only ones we're having a little bit of time crunch is here in the 10BV, 13T area, and we are looking at ways of extending that as well. So again, we have been a little disappointed in some of the wells we've drilled outside of the basins. We have seen encouragement as well. We saw good oil shows in the South Kerio Basin. We saw good oil shows in the North Turkana Basin up in Ethiopia. So again, source rock is our major risk, and we have seen evidence of source rock, so I think we are encouraged on that. This is where we're shooting seismic in the Ethiopia, very remote area. This lake here has the largest crocodiles in the world. They're up to 26 to 28 feet long. So again, we put extra heavy handrails on the sides of our boats here. Tell our guys to hold on. These crocs are spectacular to see. The reason we like this is because we've got source rocks and oil seeps here. So in outcrop right next to the basin, we see beautiful source rocks just like we have in the Lokichar Basin. So they should be present down in the basin. Again, we see oil slicks on these lakes here, which suggests there's an oil source seeping up. So we quite like this basin. We've seen the first 4 seismic lines now, and there's definitely evidence of a nice deep basin and some nice structure. So keep an eye on this. I think we may be trying to drill this next year. The one we are going to drill this year, this looks a lot like the Lokichar Basin. We got a big bounding fault. We got this whole string of pearl prospects. This is the one we're going to drill first, the Cheptucket well. Again, now that you're expert seismic interpreters, you can see the seismic here is not as good. You know, it's a bit fuzzy, the reflectors are harder to map. It's because there's a lot of volcanics at the surface. We can't get good energy down into the rocks. However, like Apachama, we have a good source rock in outcrop. These are the Miocene toy shales that have actually been mined for shale oil over the years. Again, if they're present here, they should be present down here in the basin. So this well will probably go down in the fourth quarter, and I think that has a chance of opening up this whole basin, which is roughly the same size, roughly the same shape as the Lokichar Basin. So this is a slide some of you may have seen before. I mean, this is what we're planning to do this year. We now have a firm budget for the rest of the year, $400 million gross, $200 million net. We're well funded to get through this and get well into next year. We're kind of doing three different things. We are drilling basin openers. Again, we saw some encouragement in this, not so much in this. We've got the Chuptucket well firm, and it's possible we may add another exploration well to that, the Tausey well in the North Lokichar Basin. We're drilling wells within the basin, exploration wells within the basin. Of course, the one I really like is Amosing North. The other one we talked about was Etom, so we're trying to get Toa to add in the Etom well as well. We are getting much more efficient with our drilling. You know, our first well was $68 million. Our last well was AFE'd for $9 million. So if we can drill that efficiently, right now we're getting where we can drill a well and move the rig in less than a month. So we may be able to add the Etom well into this drilling schedule without actually adding any budget, any cost. So again, that would be a big thing for us. The appraisal wells are doing quite well. Every one of these has come in as good or better than expected, so those are going to be adding volumes. There's another couple of key things. Obviously, the pipeline definition I've talked about. Capital gains tax. So by the third quarter of this year, we will see the revision if it happens in the capital gains tax. We are seeing a lot of momentum in the Kenyan government to reduce or eliminate that tax. I think a lot of the people in power there know that it was imposed at a bad time, especially during the drop in oil prices. So I think we will see a reduction or perhaps elimination, but there's no guarantees on that. But there certainly is a lot of momentum. We hope to put our field development plan into the government by the end of the year. So parallel with that, we're doing extended well tests, we're doing core analysis, and all of these things are things that we need to tick those boxes I talked about. So I'll be coming here again in the fall, and I think one of the report cards you should hold on me is how many of these boxes have I ticked off? Have I got the pipeline sorted? Have I got the capital gains tax reduced? Have I got reservoir certainty? And have I gotten to grow our resources near that 1 million barrels I talked about? There's one thing I don't really have control of, which is probably one of the most important factors of us to be able to do a deal, and that's oil prices. And again, you've heard me talk about oil prices. I'm still an oil price bull. I still think there's no way that we can basically keep the current oil price and keep our 95 million barrels a day production. I think some of the interesting parts is if you look at the cost of producing barrels, significant, over 30% of our reserves in the world are in these unconventional resources. The shales is what you heard of. The best one of these, yeah, maybe you can make money at $60, $70, but the majority of them really need more like $80 to $100 to even break even. So I think in the short term, shales are going to start dropping off. You've seen the drop in the rig count. You've seen already starting to see some drop in inventory in the United States, and I think that's going to continue. What they really want is this stuff down here. The produced barrels to date have been about $20 a barrel. This is the Middle East, North Africa, where the OPEC countries are, and that is our same cost. We are in with the Middle East OPEC cost per barrel. Other conventional oil slightly higher, but there's no way that we can keep up 95 million barrels a day just because of the cost structure of most of the outstanding reserves. The other thing to keep in mind is that the running costs of all these countries. So if you look at the budget costs, just to keep Saudi Arabia budget paid for, it takes roughly $100 a barrel oil. Now, they have a big cash reserve, and that reserve can hold out for a while, but there's a lot of other countries that don't. The Venezuelas, the Russias, the Irans, they don't have those cash balances, and they're getting in real trouble being able to survive with that. So that's going to be a push. But the problem is it's hard to predict. You look at this. This is the prediction of oil prices 2 years ago. You look at smart guys like T. Boone Pickens. He's predicting $500 a barrel of oil in 2014. Obviously, didn't happen. Matt Simmons, another smart guy, he's predicting $573 barrel oil. No one predicted this is the $60 mark. Not one person, not the International Agency, all of the smartest guys in the world, nobody predicted, except this one guy, that there'd be a little drop in 2012. He didn't predict this. So Again, one of the reasons we laid in a little extra money is oil will recover. It's a question of time. So to summarize, I think, we do have a great asset. No one disputes that. We've got a lot of people coming to look at our asset, and there just aren't many places in here you can find 1 billion barrels of oil with good contract terms that makes money even at low oil prices. So our job is really to keep our heads down, increase resources, get the reservoirs sorted out, get the pipelines sorted out, and really get this in a position when big oil companies come back and want to start buying things, we'll have it, gift wrapped, ready for them to come and pay a premium price. And I still believe that, the value is here, the value continues to grow, and we will be paid for this value. But we may need to have a little bit of patience. I think this is a buyer's market, not a seller's market, and I think we may have to keep percolating along for a bit until the conditions change and it turns over to a seller's market once again. All right, with that, I think we'll go ahead and turn over to Ron. I think we'll wait for questions until...
We'll actually take a few questions now, I think, but not too many, but I'm sure there are questions for Keith. So let's shoot off a few questions. So who wants to start? Hands up, and I have a microphone. Don't be scared. Inga frågor? Nej, men då tar vi nästa föredragshållare. Det finns ju kvar här efteråt. Så, Ron, time for you.
Okay.